Okay, guys, I am at ir.tesla.com. This is another one of my top 10 popular stock videos, but I'm going to do a little bit of a different one here because I've done several of the stock chart videos for Tesla, and I just want to show everyone how to look at a balance sheet, how to look at the investor relations news, and ir.tesla.com. This is their investor relations website, and I'm going to look at balance sheets, cash, and debt, and it doesn't take that long, and we're going to see if Tesla's in trouble right now or how they're doing. This is Brian Lewis with MMT Investing, and things just changed. So when I worked for Business Wire, Berkshire Hathaway, it's a press release company, and we managed the IR sites for a lot of companies. We had the PR and the IR sites for like 500 something companies. And so we've seen all these quarterly reports and everything. That's like what we see every day at work. And I'll just show you how to get into a balance sheet, where they're located. Because if you look up, if you just like look up Tesla balance sheet on Google, you're gonna get like a Yahoo Finance kind of page that'll give you like the yearly balance sheet, and that's old news. Like Tesla just put out their quarterly reports, so this is what we want to know, what they're doing right now. They just released it, and people, talk about the quarterly financials, but not a lot of people know how to actually go and look at it, and it's pretty simple. So ir.tesla.com, this is their investor relations site, and if you just scroll around here, you'll see there's a lot of news, and you can get all kinds of reports with huge tables worth of data and all kinds of information. And we don't care. Okay, events don't care, don't care, don't care. What we want is the SEC filings. This is the Security and Exchange Commission filings. This is their balance sheet report that we're looking for, that they file with the government. And here's all their filings. And what we want is the 10Q. That's the quarterly report that they just put out, and we're going to go in here and check that out. So ir.tesla.com, look for the 10Q. Here we go. United States Security and Exchange Commission, Form 10Q. This is Tesla. And yeah, just scroll down to the balance sheet. So it's just here, the financial statements. And this is what they file with the government, and it's pretty straightforward. There's a few rows that we want to look at here. The cash and cash equivalents is how much cash they have right now. And the total current liabilities here, this one is important. That's what they have to pay debt on right now. So this is what they have to pay out on, and this is how much cash they have to pay out on that with. And this is the cash ratio, and this is a really, really important one, especially right now during a credit contraction when people don't have the money to pay on their loans. And everyone said, oh no, Tesla's going to be running out of money, and they're not going to have money to pay on their debt because their ratio in December was whatever it was, like 6 to 10. And people thought they might come out with no cash and have all this debt, and bang, they came out with more cash than they had. So Tesla does not look like it's in cash trouble this week, and this is still not a great cash to liabilities for the current ratio, because you want to have more cash than you do stuff to pay on. So they're a little bit behind on the cash ratio, which is not a good balance sheet, but it's not like they're out of cash and they're going to go bankrupt this week or something like that. If people are worried about a crash and people are shorting and stuff like that. So let's take a look at just the total assets. So this is all their stuff, like the gigafactories and all that kind of thing. And then the total liabilities, which is the stockholder equities and yeah, just all the liabilities, all their debts, accounts, revenues, deposits, everything that costs them money over here. So it's total assets here and total liabilities, and it's just balanced and normal, and that's completely fine. And they're not ahead on their balance sheet right now, but it is not scary looking right now. So that is the general idea when you're looking at a balance sheet. You just want to see if people have the money available to pay their loans. Like right now, in a credit contraction and a crash, and a lot of companies get in trouble on their balance sheets, and they have to go ask the government for bailouts. And then when the government gives bailouts, then they can't really do what they want. It comes with a bunch of stipulations. Like the government now, as of the last week, this is news. Trump's tweeting about if they're giving someone a bailout now, they're going to prohibit them from doing any more stock buybacks. So now stock buybacks have become a dirty word. And this is an important thing to point out with uh, with all the stocks in general right now, because stock buybacks, the main thing that was driving the entire bull market at the end of the bull market, and how all of the money was going from the Fed. Everyone's saying the Fed is printing money and blowing up the stock market. But what they're doing is they're providing liquidity to the companies, and the companies are using that money to buy back their own shares. So the companies were the main buyers of the stocks, and that's what was driving the stock prices up. And now that we get into this credit contraction, stock buybacks become, well, practically more difficult. Like the stock buybacks are going to go way down in a credit contraction cycle, like they are right now. But now the government is coming out and they are openly saying that it's bad for companies to do this. They're pointing out companies that are doing stock buybacks. So now it's a huge negative press thing to be doing stock buybacks. And now the government, if they're giving bailout money, is going to start uh, actually prohibiting people from being allowed to do stock buybacks while they're holding like a bailout loan. Um, and so these bailout loans, it's not a bunch of liquidity that's pumping into the stock market. In fact, it's exactly the opposite. They're prohibiting that money from getting pumped into the stock market via stock buybacks. But what they're doing is they're giving companies that are in trouble enough liquidity to pay on their debts, so that the debts don't go bad, so the banks don't get in trouble. And this potentially can drag out a company that's not profitable from going bankrupt when it should. But a company that's on the edge, that's going to be profitable shortly, could benefit from this. So that's the look at the Fed blowing up the stock market, how it actually works. Looking at the actual numbers on the balance sheet is not that complicated. You can just see how much cash they have. It's important, and just look at their debts. And they release these quarterlies, and you can just go check this out before you buy a stock. I know a lot of people think the fundamentals don't matter anymore. Like the Fed is just pumping up the market, and I hear people saying that all the time, and that's not true at all. What's true right now is that the stock buybacks have stopped, and that is the main buyer in the entire stock market has stopped buying stocks, and that's when you see that big rip down. Is when there's no more buyers in the market and the prices come down. So, um, so we're only about halfway through this credit contraction cycle, and it's going to be a wild ride. And Tesla as a top 10 stock. I mean, I guess I can kind of draw on the chart. Like the way that the S&P has gone is it came down and did a dead cat to a bottom. This is an ABC Elliott wave, and then the S&P did a like a 1, 2, 3, 4, 5 kind of double top Elliott 5 wave impulse here, and now it's starting to turn over, and it looks like we're going to get another another ABC correction wave to the downside. And we're here in the general S&P, and Tesla, while the S&P was here, has gone here. It did that move, and then this top part, it went way up here to an island, and then this part, it went way up to a parabolic top. So Tesla is it's back up near its all-time highs, and it has come down a little bit from there, but it was really exaggerated up moves above the market. And then we saw a lot of other companies and other sectors doing like really lame versions of that same thing. But all of the stocks on balance have been following these exact moves that the S&P is making. And these are really dramatic moves that have to do with the credit contraction cycle in the world monetary system. And and it doesn't matter that much if a company is good or if it's bad. If the credit contraction cycle pulls the entire stock market down and people cannot do stock buybacks, then everything's going to go down, including Tesla. Even if they have cash, they'll come down with this credit contraction cycle. And this is not investment advice, just saying if this credit contraction cycle comes down, Tesla will come down with it. And please hit the stock the stock button, the stock buyback button, the like button to help me out with the YouTube algorithm. Um, so yeah, let's look at the balance sheet and kind of at the stocks and at the cycles and where Tesla is in this cycle, where everyone is in this cycle, and which companies seem really interesting because Tesla is a hypey stock that, I mean, before the crash, we got a parabolic top on Tesla, and we just got another parabolic top here. Tesla likes to do that kind of parabolic top thing. So I mean, if we get an ABC wave soon in like a couple weeks here, if we get this B up wave, Tesla might do a parabolic top on this thing, and that could be interesting for a long or a call option on the up. But for me this week, I'm short a lot of things, and I have Tesla shorts right now also, which people think is crazy, and it's not. I think Tesla is a really good company, and people short them all the time because they're, well, I mean, most of the car companies, like Tesla is a small car company that's being valued at whatever, it's like 750 or something right now. Most of the big car companies are around like $10 or $20 a share or something like that. And the big car companies are doing a lot of gas cars, which have a decent profit margin, and Tesla's doing electric vehicles, which have a tiny, tiny profit margin. So that's why everybody shorts Tesla so crazy, because it's a really, really difficult business model. It's an unproven sector. Like, people that have tried electric cars lose money on them. The other car manufacturers that are doing electric are not making money on their electric cars, and they're just supporting that with their gas vehicles. So that's why Tesla gets shorted all the time. But it continues to win, but it doesn't look good in a credit contraction down movement of the whole stock market. And just the price, I mean, we're at 750 or something up here, and it got down to, I think it was like 350 down here. I mean, just huge moves. I mean, it was like no, yeah, it was like close to 900 here, like close to 900 up here. I mean, the moves here are just huge, huge volatile moves. And then who knows where the downside is? If the other cars are 20, way down here, where is the downside if Tesla does get in trouble? So that's why people like to short Tesla, but people keep getting in trouble because it doesn't come down. It keeps it keeps doing this stuff. So um, Tesla's a crazy one, and is it a good investment? I don't know, but I am interested in Tesla in very specific spots. Right here, if we get an up movement in the entire S&P, I like to be in Tesla on an up, but not long during a credit contraction down cycle. And then out here in June, we should be getting out of this credit contraction cycle, and we should be getting an expansion growth cycle where money is available to companies and they can go up and do well for like a 3 month kind of jump out of this thing. And Tesla should be a really, really good stock here. So I'm being careful with Tesla now, and I'm short most things now because it looks like it's turning over, and not short most things. I have cash and shorts. That's all I have. I have no long positions right now. And yeah, and then out here in June when we get this credit expansion, this is kind of the look of balance sheet and Tesla and why everyone's shorting it. And then most people just hear Tesla and it's amazing and Elon Musk is so cool, and he's making solar and electric vehicles, and it sounds awesome, but really solar is a very difficult industry to make money in energy, and electric vehicles is a really, really difficult industry to make money in vehicles. So I mean, he's taken on very, very difficult task here, and he is being successful. And if he is successful, it's great for everybody. I mean, he's advancing society and he's doing great stuff. But just from the risk analysis point of view, the balance sheet point of view, it's been pretty sketchy along the way, and it could get sketchy again here. I mean, a lot of companies are getting in trouble. I mean, we already saw Ford in this first crash needed a bailout. Like Ford already crashed. Um, the car companies, this is a really tough industry right now in this cycle. So that's all. I mean, I'm just being careful and short on the down movements. I'm just swing trading the kind of monetary contraction cycle waves that we're getting. Um, and then just this is just doing my best to invest through a very complicated, difficult cycle right here, uh, off the top of this everything bubble. So if you watch the other videos on my channel, I mean Warren Buffett, there's a bunch of videos on Warren Buffett and like the value investing ideas, and we're talking a lot about the oil tankers recently. Like Tesla is a big hype stock, and the oil tankers are getting super hypey, like Nordic American tankers like NAT, DHT, the double hull tankers, because of this huge oil oversupply, or Euronav like EURN, and TK tankers, TNKY. Like those tankers are other stocks here that look good on an up, and I really like Tesla on an up, and I like gold during this credit contraction cycle. Gold is really, really jumpy, and gold can get a good up. And then when you get to the end here, gold and the tankers get a little bit questionable if the next cycle is going to be good for them. But it should be really good for Tesla, assuming that they're not in trouble and asking for a bailout by the end of this credit contraction cycle. So um, that is an even more extended look at the same thing. Yeah, so that's the general idea. And I guess on the topic of stock buybacks and how they're impractical when the valuations are high, a lot of people are saying they're immoral, and now the government's coming down on people for doing stock buybacks, and Trump's tweeting about it. But I just saw some interviews with Warren Buffett that came out the last couple of days, and Warren Buffett is saying like stock buybacks are not immoral, and he actually doesn't like to pay dividends because you have to pay taxes on dividends, and he just says that stock buybacks are a way to kind of pay, almost like paying a dividend to your shareholders without the tax penalties that you would get for actually paying out dividends. And he's like, if your if your company is at a good value, like a value investing kind of low value price where it should be going up long term, that's a good place to be doing stock buybacks. But he says stock buybacks are not immoral; they're just dumb. Like if you're up at a super high valuation, you should not be doing stock buybacks. So that's just kind of a look at the political situation with buybacks. Are they immoral? Because they're like politically not popular at the moment, and the government's not only like saying it's bad to do stock buybacks, they're actually prohibiting stock buybacks now, starting with these bailout legislations, and I don't know how far that's going to go. I mean, they might completely just cut off stock buybacks as a something you're allowed to do. I think they did that in the Great Depression also. I think they made stock buybacks illegal for a little while. Uh, okay, so anyways, top 10 stocks, Tesla, yes, and Tesla is an awesome company that I like, and it's really tricky to trade them in this cycle, and there's specific spots to trade them. And if you follow my channel, that's exactly what we're going to be covering over the next couple of weeks, where this down move is going and where the next up move is going to be, and really tracking this cycle tightly, and trying to find the best entry points and all of that. So super long Tesla video. If you're still here, thank you for watching. Please hit the like button. And this is not investment advice. Happy trading.